Hey everybody, welcome to Mortgage Today for Tuesday, August 6th, 2024. And oh, what a day it was. UMBS were pretty much flat on the open after a wild day yesterday. The Dow plummeted over 1,000 points with the Nasdaq losing 3% in yesterday's trading session as concerns grew about the U.S. economy. Treasury yields moved to new lows before rebounding to levels near the open of yesterday's trading session. U.S. trade deficit released this morning showed a drop of 2.5% in June. Exports of aircraft and U.S. produced oil and gas increased. Larger deficits eat away at GDP and reflect worsening economic conditions. Concern may build if Americans reduce purchases of imports over concerns of a recession going forward. The September Fed Fund futures are now leaning towards a 50 basis point cut, but now there is a 75% chance as opposed to certainty yesterday. The December Fed Fund futures are predicting between 100 and 125 basis points of cuts this year. Tappable equity hit a record of $11.5 trillion in August as 3 in 5 homeowners have at least $100,000 in equity, according to ICE Mortgage Monitor. A renewed wave of dip buying spurred a rebound in stocks after roughly $6.5 trillion sell-off that shook markets around the globe. All major groups in the S&P 500 rose, with the gauge finishing 1% higher as dip buyers emerged to scoop up bargains left after a plunge that sent major benchmarks to oversold territory. During Monday's big rout, hedge funds that make both bullish and bearish equity wagers snapped up individual U.S. stocks at the fastest pace since March, reversing a months-long selling spree, according to Goldman Sachs. There's no shortage of directional movement over the past 5 business days, with last Wednesday's Fed announcement serving as a starting point for a huge rally with a big cast of characters. Whereas the first 4 days of this wild ride had distinct motivations, today's selling in the bond market was more to do with the absence of any motivation. Bottom line, as of yesterday afternoon, there was some uncertainty as to whether the yen carried trade had fully unwound, and today's trading suggests that it is at least far enough unwound for no longer serve as an impetus for massive stock selling and bond buying. Treasury took the biggest hit, partially because they outperformed yesterday and partly due to the ongoing auction cycle. UMBS closed the day down 21 basis points at 100.47 on the 5.5. So at 100.47, that is putting us here in the middle of this range. So we'd broken through that Fibonacci line at 100.61 and then brought us back down into the trading range. It is bordered with a floor at 99.91 with the Fibonacci, with all of the technicals trailing way below that. But in terms of things you can control, check out a post from our sponsor at thatmakesense.com. This is from the reading notes from the book Tools of Titans by Tim Ferriss, where he assembles some of the greatest information collected from over 200 interviews with top-performing people from all around the globe. So check out these notes and tools at Tools of Titans at thatmakesense.com.